Hello. Today in less than 5 minutes, K&G International Advisors will give you a summary of last week's most important international financial news. Today, we'll be focusing on rational optimism. 2 weeks ago, we explained our idea of embracing uncertainty. To recap, this is the idea that investors should adopt a strategy of taking advantage of short-term and market volatility to gain more attractive entry points into long-term investments. The idea that was laid out by Dominion Capital Strategies in our last episode finishes with a question of, how do we embrace uncertainty in practice? In other words, how do I, as an investor, apply this to my investment decisions today? Optimism is grounded in reality. It's our friend here. It can be a very powerful force, and when utilized in a balanced and thoughtful way by investors, it offers us a path to solid long-term investment performance. First, let's start by reassessing the current state of the global economy and financial markets for investors. Inflation continues to plague economies, with rates the highest in decades. The war in Ukraine drags on the tension between China and the United States that make a hot war between superpowers a real possibility. The economy is showing signs of slowing, and Europe faces an extreme challenging winter, likely to include energy rationing. On first impressions, finding an optimistic take on the future could be tough. But let's dig into this, because Dominion Capital Strategies thinks that the long-term outlook offers grounds for optimism. We could go further and say that investors would be careless not to be optimistic about the long term. They have said this before, but it's worth repeating. Investors must be wary not to catastrophize over emphasizing the importance of current events and assuming that now is especially unique as a time crisis or volatility. However bad things might be, they usually are not as bad as we think. That is especially true for investment markets. History is helpful here to contextualize the current outlook for investors. In 1919, the world had just gone through the First World War, followed by the biggest pandemic, the Spanish influenza. Plenty of grounds for a pessimistic outlook, but that would have been wrong. 1919 was followed by the Roaring '20s, a decade of technological innovation and strong economic growth. Let's take an even more extreme example. In 1941, the Second World War was raging, and it was going very badly for the Allies. The Axis power were making gains pretty much everywhere. Western democratic civilization was facing imminent defeat squared in the face. It's hard to think of any moment in modern history that would better justify taking a pessimistic outlook for an investing perspective. But again, this would have been wrong. An investor buying U.S. equities in 1941 would have made strong investment returns over the subsequent 2 decades. These examples offer helpful context. The situation facing investors today is relatively benign in comparison. If we look out beyond the short-term issues of inflation, energy shortages, and even war in Europe, there are real reasons to be optimistic about the outlook for the economy and, as such, for equity investors. The process of the world industrializing is a story only half told. After China's rise, we can expect India, Southeast Asia, Latin America, and Africa to develop over the coming decades into global economic and cultural hubs. This is not only something to look forward to, it is a major investment opportunity for the investor who is able to harness a long-term outlook and combine it with a rational optimism about the outlook for the world. New technologies are coming, which will transform the world for the better. Artificial intelligence, material science, quantum computing, genetic medicine. These are just a few examples of areas of innovation at advanced stages and which are already making the world a better place to live. This is not a call to arm for investors to dive 100% into equity markets today in blind hope. Rather, this is a timely reminder in a period of elevated volatility and uncertainty to remain focused on the long term, where we believe that taking a grounded but still optimistic view of the future offers a path for how investors should be thinking and positioning their portfolios today. The sources used on today's video were Yahoo Finance, Bloomberg, MarketWatch, and Dominion Capital Strategies. My name is Juliana Lato from K&G International Advisors, and we wish you an excellent start of the week. Also, we would like to thank you for watching our video. Don't forget to subscribe to stay updated on all the important financial news, and don't hesitate to contact us if you have any queries or further comments.